Hi, this is Mark with your weekly update for the week commencing 26th of October 2009. Make sure you pay attention to your calendars this week, as there is a mix of news across most of the majors. Last week we had an extremely good trade. Many of my followers, we were in here and made a few hundred pips, and Thursday night with this bullish pin bar candle we were confidently expecting that price was going to go up another 400 pips to the 170 area. Then news came out on Friday. This news was extremely bad for the British pound, and as you can see, price fell over the period of the day 400 pips. And what price has done, if you recall back early September, I made a video and I showed you and explained how a head and shoulders pattern works. And I explained at the time that we were looking at the distance between the head and the neckline of 900 pips as a potential fall. Now, as it was, we only got a 550 pip fall. But very spookily, on Friday, the British pound closed exactly on our previous neckline. And because this price here didn't break the upper shoulders, then this is still valid. So potentially, the pound could, over the next few weeks, fall another 900 pips, down to the 153.50, 400 area, as previously predicted. Now, as I say, we were thinking price had started to turn, finally the pound was going to go up, it would be nice and easy and steady away. But what is going on at the moment, it is not that the pound is doing better or worse than the dollar, they're both as bad as each other probably, but this fundamental piece of news suddenly changes everything. And what may kickstart this and may cause a 900 pip move over the next few weeks is that Thursday of this week there is the exact same news, the GDP news. And GDP news is fundamental for the analysis of the economy as to where it is going. Now, all the experts are predicting that the US GDP news will be positive. Having said that, the self-same experts all predicted that the pound was, which is why the pound tanked so much on Friday. The way I will deal with this on Monday is I will not get involved at the market open, because the Asian traders, it's their first chance to digest this news. There could be a big gap. There could certainly be a lot of volatility in the Asian session. The two ways to play this are, as we did initially at a previous time, you can look for a breakout on the daily or even go down to the 4-hour chart, and you will look for a breakout and then a pullback to this line. Then we look for indications that price is going to fall with a view to going away. The other option is that you look for a fib pullback. And I say, last week we did get a few pips out, 100 pips out of this going the other way on both the pound and the euro. And the way that I do this, I have fibbed the daily candle from Friday. And what I would look for would be a pullback to the 50% fib, which coincidentally is 1.65000, huge psychological area. If price was to come back here and EMAs on my 4-hour or even 1-hour chart start to point that price is going to go down again, then I would get in. However, the move was so extreme on Friday and the news was so bad that I do suspect that price may just carry on. And if it does, as I say, the only way I can then play it is perhaps go down to a 4-hour chart, look for price to break through, and I would need it to break the 200 even, and then either pull back up to here or even better pull up to the 200. So it will be a case of set the trap and wait and see what happens as the week develops. Now the euro is an extreme again. It is up here. Again, we had a good trade here. We hoped that this bullish candle was going to take a much higher, but as you can see, we do have a kind of triangle forming here on the daily. And again, what we start to look for, I won't touch this until it either breaks out here or breaks down here. What it did do Friday, it just stayed above the major, huge psychological level of 1.500. So again, for me, I want a breakout pullback this way or that way. Euro GBP, again, a huge move for the Euro GBP on Friday. Again, I will leave it at market open. And again, the only way that I could look to try to trade this, I suspect that price is just going to race away here. But if price was to pull back again to the 50% area, as in here, the 9100, then I would be interested in looking for clues to go long here with a potential 200-300 pip gain upwards. Swissy is too extreme for me at the moment. We've had a double, quadruple bottom down here. Price has bounced away. You can see that the 55 has been in control of this pair over the previous month, so it is reasonable to assume that we may get some kind of reversal here, which would give us a potential 100 and odd pips down to the recent low. It may even, as we have a 5-8 cross, price may even go higher before potentially going down. As you know, I am a conservative trader and trade with the trend. Until this trend changes, I will continue with the trend. Now, talking of trend changes, the dollar yen was in a downtrend on here on the daily going back to July, and actually going back earlier in the year. In the last few weeks, price has suddenly changed. Price reversed above the 78.6 fib, and price last week started to move up. We finally broke the 9100 and then just broke the 9200. Currently, price is riding the 5 EMA on the daily chart, and everything looks bullish. The only problem for me, we have now hit this upper trend line. So again, I will either look for a breakout and then a pullback here, or what would be better would be a pullback here. I won't fib the daily candle because if you fib it 50%, the only potential move up is 50 pips. I'm not interested in 50 pips, I want a decent move. Now the best move would be down here to the 90-100 area again. If we could get somewhere in this region of the bottom trend line, an indication to go long, then you have 200 pips to play with. The dollar, the New Zealand dollar, again are just at extremes for me. They're too near the recent high. I need a good pullback on this pair. Again here with the New Zealand dollar, we're way up near this upper trend line and back down. I need price to come down here. Equally with the Aussie dollar yen. Now the dollar CAD is in a clear downtrend and has been for many months now, going back to the beginning of the year. You see here, this is the upper trend line on the daily chart. But what is happening on the daily here, we have had a 5-8 cross in an upward direction. And what this suggests is that price is now going to go up. However, because we're in a downtrend, I will be looking for clues to short this pair. Last week I told my followers we were looking at the 1600 area, 10600, for possible clues to then go back down again for 300-400 pip gain back down to the recent low. It does, however, at the moment look more bullish as the week went along. So it's quite possible now that price may come all the way up here to the 1.077 area. So anywhere within this area. Firstly, here I would be interested. Maybe just fade into the trade by only taking half a lot to start with. But certainly as the week progresses, if it does get up here, look at the 55. The 55 has been in control of this trade going back through July. If it gets to here, 1.0700 area, we have the 55, the trend line just behind. Lots of reasons here for later in the week that we may get an extremely good short. Euro CAD. Now the Euro CAD also has an untidy possible head and shoulders move here. This goes back to November of 2007. We have a left shoulder, a right shoulder, etc. However, the problem is that price has constantly bounced back off the neckline, and this pair does look extremely bullish at the moment. We have here on the weekly chart, price came down, did break the 200, came back up. Last week, price has now moved through the 34 on the 55 EMA. We're riding the 5, and the 5 is almost about to cross here. This is a huge area with a potential move up eventually of 1700 pips. So how do you play it? Well, again, because price moved so much last week and has been in an uptrend for so long, the only way I will look at this is to fib the daily candle from Friday and look for pullbacks either to the 50% line here at 1.5777 or even better to the 61.8 fib, because if it pulls back there, we also have the daily 200 in the way. Say, for Monday, anything pound related, be extremely careful. I do think that the pound is likely to tumble more because the news was so fundamentally bad.